Hello everyone and welcome back to the channel. This is episode 7 of our SPY series, how to trade SPY for profit every single day. About a week and a half ago, I realized that off of the 30-minute chart, SPY was giving us a lot of really great setups. So I started studying it and I thought, what better way to study it than to do a video series on it, show you guys how to enter trades, exit trades, and manage the trades on a 30-minute time frame. This is what we're doing here today. Now, if I told you guys you could be more consistent and more profitable using a certain strategy, would you want to learn that strategy? And I'm guessing your answer would be yes. And this video may not get you there, but this channel will. So I've got over 300 videos to teach you the strategy and the methods to get you to be more profitable and more consistent. 300 videos, guys, 300 plus, and we go through everything to help you learn this strategy, entry, exits, trade management, what everything is that we do. There's a video for all of it. So make sure you're subscribing to this channel and checking out those videos so you too can learn to be more profitable and more consistent. Let's get started on this SPY strategy. So what it is, guys, is we are taking plays and setups on the SPY 30-minute chart into time frame continuity, which is this here, meaning the charts on the hourly and the daily for sure align in the same direction, green or red, and then the week, month, quarterly, and yearly, I don't need those to be in the same direction, but it gives us a higher probability that this trade or the trade that you jump into works out. Because when we're trading on probability, and the higher the probability of a trade, the less risk we inherit. Now, every risk and every strategy has risk. I don't care who you are, what strategy you have, what trade you're looking at, there is risk involved because we as retail traders, we don't know what that next candlestick is going to do. We have an idea and we have probability of what we believe that that candlestick is going to do, and we react when it does that, but we don't know the outcome of what it's actually going to do. We know probabilities, and when there's probability, there is risk. When there's trades, there's risk. When there's trade strategies, there is risk. So as long as you understand that, you'll be okay. Let's get started on this strategy. So this is the first opening bar of September 21st. And we wait for that bar to close. So it closes. And what we do is we put this blue line here. Okay, this blue line is a visual for where the daily will flip from red to green. Anything above this line, the daily is green. Anything below this line is red. And I need the hourly and the daily in the same direction in order for me to take a trade. Now, today was a little bit tougher, especially in the mornings, because we had that FOMC meeting. Okay? I do want to let you guys know, at the end of this video, I'm going to go through a strategy with you that has worked 19. Out of the last 19 meetings, this has worked every single time. I saw a guy tweet it out, and I thought, well, I'm going to give it a try. And I won on the play. I know a lot of other people did really well on the setup. So let's get started, and then at the end, we'll go through that strategy for when FOMC meetings actually happen. Okay, so first 30-minute bar, we open here, we go down, we go up, and we close. So what I'm looking for, guys, is either a trigger, meaning we break the high of this candle or the low of this candle. Okay, so let's go to the next candle and see what happens. So we open here, we've come down, and we come back up, and we trigger. Okay, so we are in this trade, we've triggered it. The problem is this is the first target, and when we mark our targets, we usually take the high of the next wick, but because there's this gap, meaning there's no candle from here to here, we have a gap to fill, so we put the first target there. Then the next target would go to the top. So like I said, it's a little bit tougher with the Fed meetings because it gets a little choppy because people are unaware of really what's going to happen before that meeting. But like I said, once that meeting happens, there's volatility, and I'm going to show you guys exactly how you could have played it. So no target achieved. So we take our stop losses. Where would we get out of this trade? So number one, there's a few places. And it depends on the risk that you want to inherit as a trader. You can take very little risk or you can take a lot of risk. So number one, we just put it at that trigger spot. If it comes back through there, we're out of the trade. Number two, you can take 50% of that candle. Okay, a little bit more risk. And the third spot could be really the break of this candle, okay, to the downside. That's too much risk for me, especially on not on a 5-minute chart, but on a 30-minute chart. That's way too much risk for me. I will never have my stop losses at the opposite end of a candle. It's just way too much risk. The most I would do is 50%. So we break through there and we put our stop loss at the trigger, okay, where we originally got in. The next trade or the next setup, we come up a little bit more, and this is not a target, this is for future reference, and then we come right back down through. Okay, so failed trade, 0 for 1 today. Now where do we go from there? So you could have taken this break here, okay, if you wanted to. I wouldn't have. I would have waited for the next candle, and I would look for the break to the downside here. Now you notice the hourly and the daily are red, so if we break to the downside, that's a trade we can take. So the next candle, there you have it. Okay, so we broke through. We broke through the trigger, and then we hit the target. So now, where do you put your stop loss now? Once you've hit that target, do you put your stop loss there? Do you take profit, or do you put it there? Either way, you would have been out of this trade because we reversed right back up to here. The only way you could have still been in this trade is if you would have taken the 50% mark. For me, especially on a Fed day, when it's so choppy, if I have profits, I'm going to take them. If I hit my targets, I'm going to take them. Okay, so the next candle, we come back up through that range. Now, could you have taken this trade here as we come back up? Yes, you sure could have. Okay, it's not an outside bar. That's just a thing for me. Like I said, you could have taken this trade and you would have had a little bit more profit than I would have. This one here, take that. But again, this is a long ways for you to come back up to get your target. So where does your stop loss go? Number one, you can put it at that first trigger where you jumped in, or you take it at 50% of that candle, and you would have been really close to getting stopped out there. So we go into the next candle, and we came up a little bit higher. So now where does the stop loss go? Okay, where do you put it now? So you can put it at the bottom of that candle if you'd like. You can put it at that trigger, and that's probably where I would have it. That's basically 50% of the candle. So I would put it at that original trigger and wait to see if we can catch this. And guys, I have no problems. If you jumped into this trade at 386.19 and you took it up to 386.50 and you want to take your profit there because it's 10 or 15%, take your profit, especially on a day like we had today prior to the meetings where it was very, very choppy. Next candle. Okay, we come back up. So you would have had a little bit more profit there, and then we come right back through and you're out of this trade. So realistically, guys, so far on the day, you were, say, 0 for 1, maybe 1 and 1, but we'll call it 0 for 2, and then we'll call it 0 for 3. Okay, so 0 for 3 on the trades. Now what are we looking for? Now we are looking for a break to the downside. We've got the hourly and the daily red. We're on the bottom of the blue line. We're looking for a trigger. Now, I tell you guys this in the daily watch list videos all the time, to be very cautious when you have these very, very tight targets. There's no room in here. There's 7 cents from here to here. And I tell you guys a lot of times what happens, these candlesticks will come down, hit these targets, and they'll reverse right back up. Just watch. There you have it. Came through 1 target, 2 targets, a little bit further, and gone back up. So where do you put your stop losses? We break through that trigger. There's stop loss 1. Does it keep going? Yep. There's stop loss 2. That's exactly where I would put my stop loss, okay? That way it comes back through. I know I've left this trade with some profit. So now we are what? 1 and 4 on the day, and we're back above that blue line. Okay, so we're going to come into the 11:30 hour at my time, and we have another trade. Okay, we're above the blue line. The hourly is green, the daily is green. Now, somebody told me you don't know unless you're trading in real time what this is. Of course you do. You know that the day is green if we're above the blue line, and it's red if we're below the blue line. And then the hourly is easy enough to figure out. Hey, it's not that difficult. So now, guys, here is a great trade. Okay, so now you're 2 and 4, or 2 and 3 on the day. So we break through, awesome. We run up. There's your stop loss. Now, actually we hit another target there. So if you wanted to say, hey, yep, I'm taking my profit there and I'm out of that trade, because that was a fantastic trade from 387.24 or to 387.24 from 386.14. So a good trade. Very least you're putting your stop loss there, and you're 2 and 3 on the day. Now watch what happens. Right at 12 my time, 2 p.m. I watched this happen, and you better have had stop losses in place and ready to take your profit, because watch. Next candle, boom. So this is what I wanted to talk to you guys about. That tweet that I read out, guys, write this stuff down and put it in your tool belt for the next meeting. I wish I could remember the name of the guy who sent out the tweet. If you check my Twitter profile, you'll find it there. I retweeted it. Or if you're in the Discord, you'll find it there as well. The guy came on, he made a thread, and he said, at 2 o'clock, when the meeting starts, watch for the candle to jump either red or green. So what did we get here? Red. Now, to take this a little bit further, if you wanted to take this trade, blue, and I lost my chart. Anyways, the day is red here, the hourly is red here. Okay, so we take that and we hit, this is not a target, but that is, and then we just kept on going. Okay, you could have had stop losses all throughout here. At the trigger, then at the target, then at the target, then at the target. Oops, I messed that one up. Where is our line there? Let's zoom this in. There we go. Okay, so we triggered, and this would have made you 3 and 3 on the day, and you would have been green on the day for sure if you were jumped in on this trade. Target 1, target 2, target 3, target 4, target 5. Okay, we keep going. Target 6. Look, I marked these out all the way back. Target 7, target 8, target 9. Very, very least, guys, if you took this trade right there at 380.69 from 385. Okay, 385. That we're at 386, call it, to 375. That's a $10 move. You're looking at like 300% gain on that, okay? So let me go back to this story now. I don't even need to show you guys the rest of how we would have played SPY. Let's talk about how you would have played the Fed, okay? 2 o'clock, the candle goes in one direction. He told me it was going to happen. There it is. Then he said at 2:30, it's going to go in the complete opposite direction. You want to be in the trade by 2:30. Look. Down and all the way back up, guys. All the way back up. Exactly what he said was going to happen. He nailed it. This trade for me, I took 40%. I had to leave the house for the afternoon. So I got out at 40. This thing I bought in at $1.69, $1.69 calls, and it ran to 478. It's 278% run on SPY right there. These two trades would have made your week far and away, by far. One, if you would have traded the SPY strategy. Two, if you would have traded the Fed strategy. that I pointed out in our Discord. Okay, so the next candles, I don't even care what they are. There's the next one. We had an inside bar, and we have, is that the end of the day there? I think we had one more candle. There, that's the last candle of the day. So if you wanted to, again, you could have taken this trade here, jumped in off of this inside bar, and you hit targets, targets, target, target, and didn't hit this one. So you, again, if you traded SPY, you should have left. If you traded SPY all day, I should preface that. If you traded SPY all day, you would have left green. If your strategy was, hey, if I'm 0-3 in the morning, I'm done trading, that's fine. You just move on to the next day. But this Fed strategy alone would have made your week. Should have made your week. Anytime you're making 200+% on a trade, that's golden. I strive for those 10 to 40%. If I can get those every day, I feel like I'm golden. When we hit these 200, 300% plays, 100% plays, they're platinum, they're diamonds. Okay? That's what we ultimately want as a trader, because we're greedy. And in life and in trading and in anything, all we want to do is win. We want that win at all costs and as quickly as we can. That's the mentality that we have, and that's a mentality that we need to refine and not be so hungry over. It's okay to be hungry for those trades, but we have to realize that not every meal is steak and lobster. Sometimes you just have to have chicken and rice, and every once and again you go out and you're able to get the steak and lobster. Okay? Eat those small meals, and then every once in a while you get those big ones. Get those base hits, and then every once in a while you hit a homer. And if you can get on base every single time you trade, 10, 20, 30%, you will be a successful trader. I promise you that. Guys, that was episode 7. I hope you guys enjoyed it. Make sure you're following me on Twitter. Subscribe down below. Comment if you liked the video. And get in on that Discord. The link is in the description below. Good luck trading, and we will see you guys all on the next one. Bye-bye.